Hi YouTube, please give me a moment while I go live on Facebook. Hope you're doing well, having a nice day so far. I'll be getting started in just a second here, waiting for Facebook to load up. It's going to take me a second. Hi Facebook, hi everybody, good afternoon. 𝗘𝗵𝗶𝗀𝗍 here. I hope you're doing well. Today is Wednesday morning, Wednesday afternoon, Wednesday morning my time. I'm on the West Coast. And we have an important update for the market. There's good news and there's bad news, and I want to share it both with you. But first, a quick disclaimer to let you know that trading is risky, and that whatever we discuss today is for educational purposes only. Also, I want to let you know that I am going to be doing a free webinar tomorrow after the close. Link is in the description if you want to register for it. Again, free webinar, highly educational. Link is in the description. And with that said, let's go ahead and get started. We'll start with the bad news. How about that? We get it out of the way, and then we go over the good news. The bad news is, sorry to say, the market topped. This should be the start of the recession cycle, part of the cycle. As we know, there's a bullish cycle, bearish cycle, bullish cycle, bearish cycle in every capitalist economy in the world. And the bullish cycle is likely, very likely over. The first words that I said this morning on the mic in the room after saying good morning was bye market, it is over. I said that pre-market today because today's gap was highly bearish. We broke under the support on the daily chart. This is the daily chart of the Qs. The SPY looks identical. I probably don't even, well, I would need to redraw the line, but it's the same picture exactly. We broke under support and don't have any support all the way down to 285. At the moment, the SPY and the Qs are both down 2%. But like I said this morning, all out bearish. Here's the weekly chart of the SPY. We have a rounding top, right? See it? And the uptrend is now over. We basically don't have a higher high, and now we're heading back towards the prior low. Once we get there, I do not think we will stop there. I mean, we might pause. It would be good if we paused, or if we rally a little bit, because that would set up a really beautiful short signal, and we should retest the low from June, the beginning of June. After that, the next stop would be the low from 2018. So that's the kind of the bad news. What makes it even worse, so here's the monthly chart of the SPY, monthly chart of the Qs, same picture. What makes this one particularly bad, in my opinion, is it's going to be bad for investors. And the reason why is because the equities are not going to be the place to be if you're a long-term investor. Cryptocurrency is likely not going to be the place to be. Cryptocurrency just turned bearish, right? Doesn't look good at all at the moment. Bitcoin. Gold is, while it remains good on a long-term time frame, for the time being it probably topped out. So equities are no good. Real estate, IYR, likely topped out. Real estate, oftentimes when we have a recession, real estate does well because money goes out of equities and into real estate. To me, real estate topped out, probably double topped for those that are homeowners. Not good news at all. Like myself, I'm not, I don't like that at all. But real estate, IYR, likely double topped. We have a doji bar, a small bar here on the monthly chart. So once we break under it, 91.35, bye real estate. So equities are no good for long-term investing. Real estate, I don't think is going to be good. Gold is good, but you had to be in it already. It's too late now, or you just wait for another setup. But for right now, is no good. especially silver is no good. Cryptocurrency is no good. So where do you go? What do you do? And I was saying that in the room today, and somebody said, you know, the mattress. That's where my money goes. He was being facetious, I guess, but it's true. Now, it's probably time to go into cash, into money market accounts, or that's what I'm going to be doing personally. As an investor, I like to have my money invested at all times, pretty much. But long term, I don't see really a good vehicle for the time being. So that's the bad news. The good news is when the market tops and turns bearish, the volatility goes way up. So it becomes a great market environment for day and swing trading, especially if you like to do earnings like I do, you know, to trade earnings. So it's going to be a great, I predict, it's going to be a great, knock on wood, great market environment for day trading and for swing trading, especially for earnings plays, for doing playing earnings overnight. And with that said, if you want to learn how I'm going to be taking advantage of this and how I'm going to be trading earnings, I have 6 patterns that I trade earnings with. Be sure to register for tomorrow's webinar. Link is in the description. It's free. You'll love it. I promise you that. And if you have any questions, reach out to customer service. You can also reach out to me, 𝗘𝗵𝗶𝗀𝗍.com, and we'll go from there. I'll keep you posted, especially if you're in the room with me. I'll keep you posted about the market and what I see coming. But for me, for right now, I think the market topped out, and at least I don't see a way back up anytime soon. Even if we don't start the recession today, I don't see a way back up anytime soon. You know, if you look at the weekly, that weekly rounding top that formed on the SPY and the Qs. Now the monthly, we broke under last month's low, so I'm predicting this to be the top in the market. Again, bad news for long-term investors. I'm both a long-term and a short-term investor, but great news for short-term trading, okay? For short-term traders. With that said, I hope you enjoyed today's video. Again, link is in the description if you want to join me for tomorrow's webinar. And I'll talk to you guys next week. Thanks so much for tuning in. This is 𝗘𝗵𝗶𝗀𝗍. I'm Director of Education at T3 Live. I'll talk to you next time. Take care.